Andrew, thank you very much for taking the time out today to talk with me. Greatly appreciate it. We're going to be talking about your book, which is the Entrepreneurial Bible to Venture Capital, which I'm holding up right here. And quick one: how can people reach out to you if they want to connect with you?
Sure. Well, email is probably the best, and my email address is andrew at rubicon.vc. So it's rubicon dot vc, as in Victor Charlie.
Excellent. Hey, quick question for you to start this off: is why did you actually write the book?
Yeah, so I was running a venture capital equity exchange fund called the Founders Club. And we had over 50 CEOs that were all VC backed were participating in that. And every time someone was raising funding or looking at selling the company, and sometimes even both of those at the same time, I would give them my advice of what I think they should do. And eventually people said, why don't you write a book? I wish I knew this. I wish I knew what you're saying now before. It's a little too late. And I eventually said, enough people have suggested I write a book. I think I will do it. But rather than me tell the story of what happened to some other person, which I think could be useful for others to know, let me just reach out to that guy directly and ask him if he wants to tell his story. So I sent out an email to my newsletter, which was probably about 18,000 venture capitalists and VC-backed entrepreneurs, and said, if you've got a story where you learn something from an experience, and ideally, if you can make it an entertaining story too, it doesn't have to be, but we'll take entertaining every day we can, send me the story and I'll consider putting it in my book. So stuff came back from just all over the map. And then I started trying to organize it into different logical, pieces. So there's stories about how people have been successful starting a company out of nothing and then getting it to the point that investors were ready to consider it valuable enough, and how do you even get to a valuation? How do you close an angel funding round? How do you get the first money in the door without screwing it up? And then recruiting advisors, how to get your first venture capital funding in the door. And there's just lots of little examples. I mean, there was Rick Marini tells in his own words how he raised his Series A venture capital funding in San Francisco. And the reason I put him in the book was that he then, after closing $5 million from a VC, Rick went out and got 20 different angel investors to each write a check for $25,000. And he topped up his VC round with angels. Normally, angels invest before the VC.
Yeah, that's an interesting part. I was going to say usually it's before, is it not?
Right. And usually angels are not allowed really to invest after the VCs. Like if you're the CEO, and someone says, I want to meet you at Starbucks to talk about investing $25,000 into your company, and you're actually just closing a $30 million round with VCs, you probably don't even take that meeting. You can't be taking checks for 25K when you're doing your $30 million financing. Well, this is what Rick did. He went and got 20 different people to give him 25K each after Accel, the big, Facebook investor, funded him. And the truth is, most VCs are worthless roadkill. They destroy more value than they add value, despite their best efforts. Those angels that Rick got into his deal did more to help branch out, grow super fast than any of those worthless people at those two VC funds that he got. So he ended up surrounding his company with network. He had Sean Parker. The list of people that were in that angel round were just a total who's who. He got so much celebrity entrepreneur support that he was doing the exact correct thing for his company. So there's a lot of stories that are just actual true stories being told by the wonderful person, much more accomplished than me, and then it starts to have one cohesive voice.
So one thing that I gathered from this is the fact that it sounds like, you know, everything's changing in this world, right? And I think that's so true of everything in the last 10 years. Internet has changed things, relationships have changed, everything's changed. And we'll get a bit into that. One of the first questions I wanted to ask you is, and I'm sure a lot of people have this perception of what certain things are, is what is the difference, say, between venture capital and private equity, or venture capital and angel investors? Just a real quick one for people to understand.
Well, and some people disagree about that. In fact, I think there is a section in the book that says the difference between venture capital and private equity. And
Yeah.
I make jokes about it too sometimes. But I think in general, VCs are investing in loss-making businesses. So that means that at the time that Rubicon Venture Capital will wire money to the startup has operating expenses that are higher than their revenues, right? So they're not profitable, they're loss-making. And a VC invests in these loss-making businesses, and then the valuation goes up very fast. So if in the last 6 months, our portfolio has doubled in value, and these are companies that are spending our investor money to grow quickly, okay? A private equity fund often is investing in profitable companies. They're looking for EBITDA positive companies, and then they'll invest in this profitable business, and then they'll do a few things like they'll borrow a ton of money, creating debt. They might be borrowing 12x the equity dollars they're putting in. And they'll buy Eircom, the telecom network operator in Ireland. They'll buy Tele-Denmark, TDC, and they'll get so much debt on that thing that it starts to change the tax structure, and then they'll go and sell off the Yellow Pages division or something, and they actually got all their money back just on that alone, and then they'll lever up the broadband to 95% of revenue with debt because it's now just a utility. So I think of private equity is they are doing cold calls to good businesses saying, we want to buy some of your business and make some changes. VCs are receiving inbound avalanche of 10,000 plus deals a year seeking funding. And then we're trying to figure out the best ones and muscle in,
Yep.
But I mean, what has changed? So in 2001, we had a big dot-com meltdown, right? The IPO market closed, valuations were down. It was almost impossible to start a business on the internet and raise money, whereas there was a ton of money leading up to the big meltdown. In 2008, we had the credit crunch was August 07. By September 08 had the Sequoia Good Times Rest in Peace, slides went out. And so that was the official second meltdown that we had in the internet venture capital space. What my understanding is that the big pools of money, the big $25 million check writing guys, the endowments, the pension funds, the insurance companies, the banks, the single family offices, the multifamily offices, the big pools of money, like the Rockefeller family fortune, all that kind of stuff. They thought strangely that venture capital looks safer than real estate. So instead of the VC funds getting smaller, more money in 2008 got pushed into venture capital. And so what happened was VCs that had a $200 million fund closed funds that were 500 million, 700, 1.2 billion. So we watched VC funds that used to be $50 million type dollar funds become mega funds.
Wow.
But these guys didn't hire a ton of people or invest in their own business. They just split those management fees and got bigger houses. So what ended up happening is that the typical VC fund went from having a couple guys trying to invest 50 million and then exit 200 or 500 million, all of a sudden had to manage much bigger funds. All the middle funds of 50 million to 250 failed to raise more money. And so the change that we saw in the venture capital was the big funds got bigger the middle funds became zombies. They sort of died off. And then angels started fueling everything for true venture capital. So angel investors in 2006 started to really take off. They were filling in the missing gap from '01, '02, '03. Then they started professionalizing a bit. And even I was involved with creating one of the probably the best angel groups. And then we were adding value to the startups. You've got to add value. It can't just be money. And so now we've seen a big surge of new small micro VC where they're doing very early stage investments, investing in large portfolios. And then at the same time, the VCs moved downstream to what starts to look a little bit like private equity, but they still have the spirit of investing in loss-making businesses.
I'm glad you brought that up. That was one of the questions I was going to ask you later on was kind of where's it moving? Where are the angels starting? It seems to me the angels are moving up, and you said it just eloquently there. I mean, it was angels moving up in different spaces and stuff like that. Another question I got here is, what should someone look for in a trade with a venture capitalist? Say I'm a firm trying to raise some money. What are some of the things I should be looking at? What in your experience do you think is something that you should be looking for?
Well, I mean, I think if you imagine someone's got some kind of software or internet business, they should be thinking, what do we need to do to make this successful? Like, what needs to happen for this to be successful? What kind of people do we need to hire to work at our startup that will make it happen for us? What other companies do we want to do business with that will be our customers or our distribution partners, or just fit in like Lego pieces to make this thing work? And I think that it's important to surround a company with a network. The network around a company is your company. So Rick Marini getting those 20 people involved in his business as investors was solving problems for him. He needed people that were whales on Facebook. He needed people that had 1 million Twitter followers, not 29,000, 1 million. And he got that. And so every business is going to have a unique, set of needs. And so ultimately, what you want is to find a fit with one, and theoretically more than one, investment firm that can bring something to the table. So if I invest into a startup, I need to prove what I'm going to bring to the party that's not redundant with the other guys. If I can bring in and say, well, I've raised money from IKEA. They have 349 stores, and the smallest store has over $1 billion a year of revenue. We can get your product into IKEA stores. Or, we've got, a Hollywood group that manages, all these celebrities. If we can get them to start working with the startup, and it's good for the celebrity, it was good for the startup. So you have to bring something to justify yourself in a deal that everybody wants to be in. So I think that each CEO should just ask himself, what do I need? And how can I fill that missing gap?
Gotcha. Great information there. Hey, what's the toughest thing about raising venture capital if you're a firm? What do you think is one of the toughest things? What is one of the toughest things about raising venture capital if you're a firm?
Yeah, so I've been to some extent continuously raising venture capital funding in one shape or another for over 20 years. And I think that raising angel funding, raising a venture capital funding round, or even raising a venture capital fund, it's almost all the same thing. It's very hard to get the first lead investor. That's always, I've seen this movie end 1,000 times, and it's usually that. Oh, we're just looking for a lead investor. We have a lot of wimps that are ready to follow, but we don't have a lot of brave Vikings ready to jump into an empty swimming pool here. Yeah. So it's finding that lead investor is difficult.
Gotcha.
I think.
Yeah.
And so I think, I try to show this in the book, you don't start with a humongous Sequoia-led big venture financing, you start by maybe giving a little bit of equity away to some advisors, and then, everybody knows somebody. So, get someone that loves you, that cares about you, that wants to help you, and get them to put a little bit of their money in, and then get that person to introduce you to someone they know. Then you meet the people that are known to that first guy, and then you get more money in the door, and then you get more value going with the business until it starts to appeal to the next level up. So you want to continually go up, up, up with increasing the valuation of the business and probably increasing the total dollar amount of financing, coming into the company. So it might look like you get $100,000 from an accelerator, or it might look like you do a $300,000 financing round with friends and family, followed by $1.5 million coming in from a lot of different angels. Maybe you're raising money on crowdfunding these days. And then you get some of these VCs are actually micro VCs, so they're almost like super angel funds. Some of them are participating, and these things are getting highly syndicated. So it's not unusual to have 10 or 30 different investors in the same financing round, Yep. And then, another thing is to try to network to investors. So try to go, get onto a meetup or something and go find some networking events in Calgary or wherever you live and start meeting more and more and more people. Understand as best you can what the investment thesis is at the different VCs, that when you're a fit or when you're not a fit.
I love the idea, the fact that you were talking about leveraging a network and moving it up the food chain per se is excellent advice. Not only just in your world, but I think in anyone's world is leveraging a network. Hey, one of the things you just brought up too was crowdfunding. What's your thoughts on crowdfunding?
Well, I'm just completely amazed at how the SEC is just so publicly failing to deliver the requirements of the, what was it? 2012, April 8th, signed in the Rose Garden, this is it. And then they continue to not deliver these requirements to regulate it. So I think the regulators are not sure what they want to do. But crowdfunding is happening. And there's equity-based crowdfunding where you're selling stock and ownership in your company via crowdfunding to non-accredited investors. And there's also rewards-based crowdfunding, which the SEC has failed to screw that up. So despite their best efforts, they can't stop people from pre-selling products. So we just invested last week into a company in San Francisco called NavDeep. And so when you're driving your car, you take this little device and you stick it on your dashboard in front of your steering wheel, and then it connects to your Android or iPhone. And it's like Minority Report. It goes by gestures and voice recognition. So when your phone rings, you can say, answer phone, and it, with your eyes still looking, at the road. And you can actually do everything almost that you can do on your iPhone while driving your car with both hands on the wheel, With those guys, it made sense to pre-sell this $299 product that theoretically every person with a car should want to own this NavDeep device. It's very cool, it's safe, and you would never be looking at your phone again and getting into a car crash. For them to put it on crowdfunding made sense. For them, it made sense to invest their own money into getting a video that was entertaining and just down and dumb that everybody can understand. The dumbest guy in the room watches that video and wants to buy the device. And then on crowdfunding, they can go and sell as many of those things as possible, and then and then build an awareness for the company. So some things are a really good fit with crowdfunding. There's other things that are too complicated to express and communicate in a 3-minute video.
Yep.
And it's just not going to be very suitable for crowdfunding.
Yeah, really what it comes down to is it's certain things that work, some things it doesn't work, right? And that's just the way it is in life.
Right, and typically a consumer-facing product is going to have a better, life on a crowdfunding platform than some very complicated business enterprise technology.
A side note, I saw one last week actually was you attach this thing to your hose and it would actually fill up 100 water balloons at once. And the guy was looking for, I think it was like $6,500, and he ended up getting $650,000. It was absolutely crazy. But hey, as a father, I saw it and I go, that's awesome, man. It's like, and you just take
Yeah.
these balloons and pull. It was just amazing. Hey, one of the things that you brought up in the book was the idea of having a pitch or a good pitch. What's your take on what are some common elements of a good pitch that someone should be looking for when they're going to a VC?
Yeah. Well, I mean, I think that it's important to invest a lot of time and care into learning how to articulate your business and your value proposition. And, it's important to be able to, in sort of 2 or 3 sentences, explain what your business is and what it does. And so I think a lot of entrepreneurs struggle with that. And it's easy to tell people to get yourself a good pitch. It's not so easy to get one. And so I think a reality of how you address this problem is getting advisors involved with a business who have experience of starting businesses and raising lots of money. And chances are they can work with you on getting your pitch down. And then, part of this is how you say, when someone says, what do you do? And you're at a family reunion, you want to be able to say something. They might be being polite to ask you what you do. You don't need to show them the inside of your signaling gateway and how it's got ATM packet switch core. You might just want to say, I'm in the telecom business, or something simple.
Yeah.
But you then, I think it's important to have like a 30-second pitch, a 5-minute pitch, and a 20-minute pitch, and how you explain what you do and get everyone in the company on articulating the same message. And I think it's important to I like to see a slide deck that's around 10 slides that tells me what does this company do? How much funding have they raised already? What are the key milestones the company is hit? Because you think of it this way, I receive over 10,000 startup investment proposals a year. It's very hard just to open those emails. It's just too many.
Absolutely.
And having written a book, it's even increasing the stuff I get from all over the world.
Yep.
So when I open an entrepreneur's slide deck, I'm incredibly impatient. I'm sitting there like this, tick tock, tick tock. I need to as quickly as possible, figure out, is this something that's appropriate for my venture firm to put time onto? And if someone is going around without telling me stuff I really want to know, then it's tempting to just hit the delete button, and move away from it.
And you move on. Hey, one of the things you just brought up too that I think is of interest is how does someone go about finding a good advisor or someone who can mentor them in their organization?
Yeah, well there's different ways this is done. I think a lot of times if someone is starting a company, they're going to do something that's going to be disruptive to an industry that they already come from. So, a friend of mine, Vitaly Golub, he founded Keen Print, and he had been working at like Kinko's from the age of 12, and then he ended up buying a printing business and then turning it around and selling it. So, the guy really knows his way around the printing industry. And so if you're someone else would be a fashion person who then launches some mobile fashion app or something. So typically entrepreneur is addressing an industry that he or she already understands. So an obvious thing to do is say, where did you used to work, and look through your own resume and reach out to your old boss or someone else and say, how would you like to give me some advice? Since you own a huge company in that space. So I think reaching out to people that you already know in your industry, is one starting place. But different advisors will serve different functions. So even within my own business, we need to be able to add value to our portfolio company. And we also need to be able to raise money for our fund. So some of the advisors I have, some of them, their main function is to be able to get me meetings and dinners and lunches with people that can write a $25 million check into my fund. There's other people who, total different function, their main thing is to be able to just give advice to CEOs that we've already invested in. So, figure out what you need and find people that can fill in these missing gaps.
Great information.
And you don't need to hire them. You don't need to, not everyone needs to be your full-time employee that you cannot afford. They can be just friendly people giving you advice. Maybe it's on your board of advisors. Maybe it's on your board of directors. Maybe they invested their own money into the company, or maybe they didn't.
Gotcha. Tell you what, I've got to be cognizant of your time because I know you're going to meetings and stuff. I've got a couple more questions, and then we'll wrap it up here. But I think one of the ones that I saw in there, which I laughed when I saw it, was, do you ask a VC to sign an NDA? And I can see the recoil there. What's your thoughts on that? Because I have my own thoughts. I absolutely hate NDAs. But
Yeah.
Please tell me your thoughts on it.
Well, all right. So the short answer is, do not ask a VC to sign an NDA. It's stupid to do that. It demonstrates to the VC that this is the first time you've ever attempted to raise venture capital funding, which is not a message you want to communicate. A message you want to communicate to a VC is that this CEO and founding team are skilled at raising venture capital funding, and the VC will invest today at a specific valuation, and these guys are going to raise money from other VCs in the future at a higher valuation. So if I invest now at a $3 million valuation or at a $40 million valuation, what I want is to see that company raising money at a $250 million valuation, and I'll say to my investors, hey guys, we're up 5x already on our investment in that company, right? That's what we're trying to demonstrate. If the CEO says, would you please sign a non-disclosure agreement, an NDA, and we have a policy of not signing them, it's just really, really foolish. At the same time, when I was an entrepreneur in the 90s and I was raising venture capital funding as a CEO, I remember reaching out to Jonathan Silver and saying, we're only going to send you our business plan if you sign an NDA. And Jonathan took great care to write me this long message about how we never sign NDAs. We had this crappy office where there was actually a carpet in the bathroom. I printed that email and I taped it to the toilet bowl. So that's how much I didn't like a VC telling me how he's not going to screw me. And I was suspicious that these vulture capitalists were going to steal my idea. So I was naive and foolish and was offended by a VC telling me, I'm not going to steal your idea and I'm not going to put that in writing. At the same time, if you're trying to open 10,000 emails of investment proposals and one of them says, before I'll even show you what I'm working on, I require you to address a legal document. That is just straight into the delete file.
Right into the trash bin.
Like, I'm not going to take a phone call with that guy. I'm not going to take a meeting with that guy.
My feelings are exactly the same, right? I do a certain thing, you do a certain thing. You're not in the business to do what they're doing, right? You're in the business to raise money or do whatever it is, right? I find it absolutely baffling that some people. I remember once a girl asked me, she had this hair bow thing that she was doing, and she said, "I'd like you to sign an NDA." I said, So first of all, I'm starting to go bald. So why would I even think about that? And then secondly, it's like not even of interest to me or anything like that. Hey, one last question I've got for you is as it relates to your book, and I'm going to hold it up one more time here so that people can see it. Um, what's the best piece of advice that you think someone can garner from your book?
Oh, I don't know. I think
Apart from read it, by the way.
yeah, I think the biggest bit of advice in there is that it's all about people. Like I once heard Lou Gerstner from IBM say, "There's not a lot of secrets." We'll tie this together to the NDA. There's not a lot of secrets in the fast lane. In the technology world, information spreads very quickly. And so for a company like IBM, with information passing so fast, it's not about your good idea. It's not about your amazing technology. What it is about is execution, and it's about the people. And so success is about execution and people. And a startup needs people and capital to make that happen. An idea without a team and without funding is fairly worthless. It's not worth protecting with an NDA. So I think the key message for me, if there was just one message only, is to say it's all about the people. Try to get the best co-founders possible, and then try to get the best advisors possible, and make sure you attract the best talent in your company and the network that you build around the company. And that's probably the biggest bit of advice. And so make every investor prove how much value they're going to bring to your startup.
Love that idea. Absolutely love it. Andrew, I appreciate your time here today. Thank you very much.